Hey everybody, this is Jeff, Swing Trade Warrior with WarriorTrading.com, back with my nightly watch list build here. We'll do some trade recaps, some Q&A. If you guys have any questions, as always, you can enter them in the box. I'll get to them as quickly as I can. Or if you're watching this on a recording later on, feel free to email me, Jeff at WarriorTrading.com. Always happy to take questions from people, whether you remember or not. I like helping people out whenever I can. Save you from some of the pitfalls and mistakes that I made. So, having said that, let's take a look at the S&P and see what kind of position we're in here. So ever since last week, we popped up and pierced the 200 moving average, and now it appears to be holding that level. The 200 moving average down here at $200, this 200 whole dollar resistance area, very key area for the market to trade above or below. It's going to be very determining going forward. We did get a close above the 200 today again. We did make new highs, but we weren't able to hold them. So not sure. Not sure. There's a lot of indecision in the market. It was also a very light volume day today for the S&P overall. You can see it missing here with only 73 million shares as opposed to its normal 150 or so. So trading on very light volume, but still an inside candle, but above resistance or above support here. So next target realistically is going to be the 205 area, and that's still going to help us determine whether or not we're back in bullish territory and we can resume trend, or if we fail that area and we end up selling off, coming back down. Only time will tell. But as I always say, and as I always tell my students, no matter what we do, we have opportunities to trade both long and short. And so in these market conditions, since we don't know what we're going to get one day to the next, we find good setups that are both bullish and bearish. We like having no bias, but we're ready to go either way depending on what the market gives us. First thing I do is I run my scans. The scans today generated quite a few names with some decent setups, a lot of small caps. Small caps have been out of play for some time. I have not been trading small caps for a while now. For whatever reason, there's just haven't been a lot of good setups coming out of the small cap world. Today we got a bunch. So we'll take a look here at some of these names, starting with GNW. This is Genworth Financial. The stock is a former high flyer here. It's come way down over the years. You can see that at one point, this thing was up to about $20, $19 or so. But it's made its way down to penny stock land here, and it's just moved up off the lows from $1.57, and it's trading underneath resistance at $3. So we have this big move up off the bottom here, rejection of the lows, comes up and makes new highs, taps this $3 area, and we get this pullback here. So you can see the volume bars down here at the bottom. They're somewhat ascending. We have volume increasing. That means buyers are coming into this trade. This is a bullish indicator. We have good trend confirmation, candle over candle move higher, and also relative volume is increasing. So that means more people are moving into the stock as they're taking notice of it. We have a light volume pullback. Once it fails resistance here just over $3, we get a light volume pullback, and you can see the volume quickly drops off as people start taking their profits, and maybe some shorts come in, try and hammer this thing lower. But it holds. It holds at this white line, which is the 50 moving average, and it holds at the 20 moving average and below that. So now we have this light volume pullback, and now we're curling up off of that support. And light volume pullback to support, curl up, and now we're looking to retest these highs and leg up to the next level. Very similar to what we had back here. You have this big sell-off, curl off the bottom, made new highs, tapped it a few times, failed, curled up, and then we broke out. So we're looking for the same kind of thing here. Watching this one for a long, over $3, and then I'm going to add over 310. That's going to be my add spot. That'll be my add spot on this name here, and give myself a little bit here. Let me move this up. I'm going to add over 310, maybe 315, but that's going to get us over the high of this whole range right here. This will put us back into bullish territory once again, instead of just the sideways pattern we see. And then our next target on this for the very short term is 345. That'll be the first target on this. After that, we can evaluate, but we do have room here up to 380 or so. So if we can get 2 or 3 times the move, then 2 or 3 times the risk, then that's a good profit to loss ratio and something we should strive for in all our trades. Whether we get there or not, I don't know. But again, I'm always looking to scale out, taking profits every 3 to 5%. So GNW is my first name on watch for long over 3, ad spot over 310, and we'll put our stop initially at 275. Oops, ELNK, that was the next name to pop up. Okay, ELNK, another kind of similar chart here, right? We have this rejection of the lows, big move down, hit support here after earnings. The stock rejects the lows, starts climbing higher, makes a top just here at the 610 area or so, which is also previous support area from back in here. Not very big support, but it was enough to shut this move down. We got this again. We had this high relative volume. Look at the size of these volume bars during this run up here. We have this big trend, this big bullish trend moving up, high volume bars, and then we tap that resistance spot. We get a doji, an indicator of possible trend reversal, and then sure enough, we get candle under candle, and this thing sells off for a week. And it's on light volume. So we have big volume move up and then a light volume pullback to support. What's support? Support's going to be the 20 moving average right here. So it's trading between the 50 and the 20. So we have a big move up, light volume pullback to support, and now we're curling off the bottom and we're testing that resistance area at the 50 moving average. Again, another resistance area here at the 620 mark or so. We are looking for an entry on this over the 620 mark. Definitely want to take it over 620, but I also want to add to this over 650. God dang it. We're going to add to this over 650, which is a big spike from back in here on 113 of this year. And see, we're going to look to see if we can't get this bad boy up to about 715 or so. I think realistically, we got room here to, let me see, zoom out a little bit so you can see. Okay, we're going to have some room here. Realistically, we're working with this range right here, anywhere from 715 and then between 650 area where we're adding. You're going to hit resistance on these little candles right in here from back in May 2015. And then you may hit some resistance again right here from June of 2015. That's the difference between 670 and 680. Either way, we're going to be in this at 620, so that's a 10% move if we can get 60 cents here on a $6 stock. That's $6 stock. It's roughly a 10% move. Not going to worry too much. Just going to look to take my profits every 3 to 5% as we move up. What I like most about this trade is not only the pattern over here where we have this low volume pullback to support and to move up, but I like the relative volume spike today. So, a lot of buyers coming into the stock, nearly 3 times as many as we had on Friday, which was a low volume day in the market in general, but definitely like this one for the move back up. So ELNK over 620, add spot 650, we'll sell through 670, 690, and if the trade is favorable, we'll hold a piece for the move over $7. Okay, another name, old name, High Crush Partners here. This one is a previously traded name for me. This thing has been beaten down all the way from $70 back in 2014 to $5 now. So not a long-term investor on this, but I definitely like the short-term setup. What do we have here? Okay, we have something in a steady downtrend. We do have these big big range moves over the moving averages here as this thing pops up. But fails at the 50 every single time. Here we finally got to pop up and a move and close over the 50, but again it failed. It came right back down. So I would not expect this pattern to be any different. I mean, look at this, going all the way back to August of last year. Pops up over the 20, fails, and then pops back up, fails, pops back up over the 20, fails. It fails at the 50 every time. Got over the 50, but still failed hard. Now we're doing the same thing. So we're getting this pinch between the 20 and the 50. as I like to say, it's time for the stock to shit or get off the pot here. It's got to make a decision. It's going to go up and it's going to break out, or it's going to go down and it's going to break down. I think that with the market conditions, and I think that the stock trading up off the lows here, I think this thing moves higher, at least in the short term. So I'm going to look to take this for a long entry, initially over 525, and I'm definitely going to add at the top of this flag right here at 550. That's going to put us well outside of this recent trading period. This will put us back into early February price range, and then from here we definitely have room back to 615. I'm trying to see. Close enough. We have room to 615, which is going to be support, or excuse me, resistance from back here in February. It's going to be support and resistance all through November and December of 2015. And then ultimately, if we get another spike up, our target will be $7. That's a pretty big range. Once we get over 615, I'll be happy to get to 615. Like I said, though, keep an eye. This thing has a history of popping up and selling off. But the cool thing is these pops are a couple days at a time. When we look at this back here, this thing ran for 3 days from $13 to $17. It put in a 25% move. It's capable of very large moves, but it does sell off in a hurry. So once the move is over, get out of the way. Flip to the short side, do what you got to do. But I expect that's what's going to happen here. We're going to pop up to 615, maybe 7, and then it'll come in hard. So HCLP, High Crush Partners Limited, is on watch. That one's going to be, like I said, a long over 525, at over 550, and my stop is going to be at $5 to start. And we'll evaluate once the trade's underway. We'll be looking to take profits every 3 to 5%. Okay, scaling out. Scale into strength and scale out into strength. Okay, my reversal watch for tomorrow is EIX, Edison International. I've been watching this for a few days. This thing, along with the rest of energy in the world, thanks to oil, has been moving higher. We have this big gap up after earnings. Attempt to fill the gap to the downside never happened, and so we broke out and kept running. This thing put in a 8-day move, candle over candle, meaning that it's in a very strong bullish trend. Each day for the past week has made new 52-week highs. That cannot go on forever, so we're simply waiting and watching for an opportunity for this to roll over. That opportunity is here. We get this red doji-looking candle here. It's an inside candle. Didn't break the new highs. Friday we sold off from the new highs. Couldn't hold that level. Now we made our pierce below the first candle to make a new low. And we're going to look for continuation of that pattern for the move to the downside. You can look at all the energy stocks here. They're going to be very similar. Our utility stocks are going to be very similar with these big runs up, and then we're going to start to see them all roll over, I suspect. And so EIX, I'm watching for a move under 69.80. I'm going to wait until we make lows. We need to get below today's low, which is 69.81. It's going to be my entry. And this one is a relatively, not huge range on this one, but relatively safe, very liquid name. And so we could take a little bit more size here because it is going to be a little bit cleaner of a move. 68.80 is going to be our first target, and then I suspect we'll have room down to the 68.20s. So a little over a point here. You zoom out and you can see the correlation between these levels and previous levels. Okay, so this will be our first target, right? Big spike from back here in December of 2014 is going to be our price target here in March of 2016. So previous resistance will become future support. So in this case, we're looking for a short entry under 69.80 and put a stop here at high of day 70.50. And we're going to look for profit target, or we're going to look to scale out around 68.80, take a little more off at 68.20, and we'll see what happens. If we get a close near the lows, probably hold on to a chunk to see if we can get any kind of move back down towards 66.50. That'll be our next target after that, which is right here. Zoom out. So that's EIX. That's going to be the reversal name I'm watching to short tomorrow. And one other name I put on watch, unless I can see something, or unless I think or see something before the end of the night. The only other name I wanted to watch was Apple. Every day I like to run through unusually high and unusually low stocks that are trading with higher low implied volatility ranks. Right now, Apple is trading at an unusually low implied volatility level, which means that as it's been trading sideways here in this flag pattern, unable to break out as for the last 2 weeks or so, it's kind of been in this range between 104 and 100. The implied volatility has really been sucked out. Well, I think that the market remains stronger than weak, and I think that if Apple does end up breaking out here, once we get over really the 103 area, I think we can probably get a move back up to 107 or so short term. So I like this for at least a bullish move to the upside here. I'm not looking to trade the stock on this one. This is a opportunity to use a bull call spread, a debit spread. We're looking to capitalize on the low volatility. We buy volatility when it's low, right? We go in with debit spreads looking for an increase in volatility as price action accelerates. Once a stock breaks out, implied volatility is going to spike. And so that's what we're looking to have happen here. Now, if implied volatility were the opposite, if it were really high, and for whatever reason there was news or Apple's earnings were near, in this particular setup, I wouldn't look to buy a debit spread. I'd look to sell maybe a bull put spread and capitalize on the high implied volatility, knowing that everything's going to revert to the mean sooner or later. So if something's unusually low volatility, we expect it to get higher, back toward the average, and if something's really high, we expect it to get lower, and we can sell for credit. So in this case, it's low. Looking at the April monthly 100, 105 bull call spread for about a 260 debit, 262 debit is what my order's in for right now. Again, I'm buying an in-the-money call spread here because it will be, yes, my gains will be capped, but my probability of profiting, winning on this trade is much higher than if I were to buy the 105, 110 call spread, which would be just purely a theta play at this point, because both strikes are out of the money. So by buying an in-the-money call spread, we're able to capitalize sooner on any implied volatility changes and hopefully get out of the trade that much sooner. Yes, like I said, our gains will be capped compared to, they won't be as high as they could be with a out-of-the-money spread, but our odds of profiting sooner are much higher, and I would rather take the easy, sure money, as sure as it can be, much sooner than waiting longer and paying less. So I have no problem with that. That's the setup. You're more than welcome to choose an out-of-the-money call spread if you like. It's fine. It's cheaper. And yes, you can make more money if Apple takes off. So it's up to you entirely. Manage your risk as you see fit. That's it for today. That includes all of the items we're going to be looking at tomorrow: GNW, ENLK, HCLP, EIX, and AAPL. If you guys have any questions about any of these names or anything related to swing trading or trading in general, as always, feel free to email me, jeff@warriortrading.com. I know I was talking fast and talking quite a bit, so if you have any questions and I didn't cover something in depth enough, just shoot me an email. Trying to keep these videos as short as possible so people watch them in their entirety and they don't get bored. Other than that, guys, hope everybody had a good start to the week. It was a great start for us at Warrior Trading, and definitely looking forward to what the rest of the week has in store. Hope everybody has a good night. We'll be back here tomorrow. Take care.